You're listening to the Economics and Country Risk podcast from S&P Global Market Intelligence. In each episode, our experts will provide you with the where, how, and when to make decisions that transform your business.
Hello, I'm Kristen Hallam, lead content strategist for global intelligence and analytics at S&P Global Market Intelligence, and your host for this episode of the Economics and Country Risk podcast. We're going to take a look at the banking risk landscape in emerging markets, particularly mainland China, Ukraine, emerging Europe, Argentina, and the UAE. Joining me for this discussion of events that could alter this landscape is my colleague from Market Intelligence, Natasha McSwiggan, Senior Economist for Europe and Central Asia. Natasha, welcome to the podcast and thank you for being here. So, Natasha, one of the trends that could impact the financial sector in emerging markets in May is increasing acquisitions of smaller rural banks in mainland China by larger ones. Why are rural banks open to acquisition?
So what we're seeing with the smaller rural banks is that they tend to have a tighter liquidity positions compared to the larger banks in the sector. This is really due to the historical aggressive credit extension and the recent regulations that are restricting their abilities to obtain deposits outside of their service areas.
So, how might these acquisitions change the sector's structure?
The sector structure is likely to change as a result of these rural banks being absorbed into the larger entities. We're likely to see as branches, and the rural bank share of total sector assets will likely fall.
And what other impact could this trend have?
So for the other impacts, this move will likely guarantee continued liquidity for the micro, small and medium businesses and otherwise known as SMEs, which have been the main destination of loans for the rural commercial banks. We expect that the acquisition drive will be encouraged by local authorities and local branches of financial regulators, with the aim of ensuring the stability of funding for the local areas and so reduce risks for the financial system.
So, Natasha, let's move on to Ukraine. How is the government's plan for privatization of two state owned banks going?
So what we saw was that Ukrainian authorities noted in the memorandum to the International Monetary Fund, or the IMF, that it was seeking to sell two state-owned banks to private investors this year. So this forms part of its overall plans to privatize state-owned banks in Ukraine by the end of 2025, as agreed with the IMF. The privatization of state-owned banks is likely to be held back by bank-specific additional activities.
Is the ongoing conflict in Ukraine a factor holding these deals back?
We do anticipate that the ongoing armed conflict will keep credit risk tightened in the near to medium term.
Understandable, I'm sure. So, staying in Europe, let's talk about the first quarter data from the Central Europe and Balkans or CEB region. What do you expect to see there, Natasha?
So what we have already seen is some data releases for the first quarter so far this month, which reaffirm the limited credit expansion and also the ongoing asset quality pressures in the region that we expected to see. And we also expect the further results to reflect this also. The release of financial soundness indicators like the NPL ratio generally have a tendency to lag behind balance sheet indicator releases. Positively, though, we have seen that the robust net interest margins brought on by the tight monetary policy environment are likely to continue supporting bank resilience.
And where might we see upside to credit growth in the second half of the year?
So it's likely in sectors which already have fiscal support in place, such as Hungary, which has its subsidized credit scheme, and also in Romania, which has its loan guarantee programs for SMEs.
Okay, so hopping over to Argentina, where banks have been wrestling with capital controls, there's the possibility of banks being able to use BOPREAL bonds to pay dividends overseas. First, could you tell us a little bit about what BOPREAL bonds are?
Yeah, so to tackle the problems of paying foreign importers due to the capital controls that are in place, the Argentinian president Javier Milei introduced the external trade bond known as BOP Real at the end of 2023. And so essentially these bonds can be purchased with owed funds from import transactions and are denominated and payable in dollars. And so far from what we've seen of this program, it's been relatively successful, supported by fiscal benefits and a short maturity.
So, what problem is Argentina's government trying to solve by opening these bonds up for use to pay overseas dividends?
The demand for the third series of bonds has actually been low due to several factors, including its larger maturity, low fiscal incentives, and a lower exchange rate gap. The government has added owned dividend payments as another category that could access the FOP bonds. Banks have been facing difficulties paying dividends abroad, as mentioned, due to the capital controls, and the FOP likely offers an option to pay the shareholders.
And what do you expect to happen now that banks are permitted to offer BOPREAL bonds to foreign shareholders?
Previously, the limited dividend payment has led to strong capital rebuilding. And we estimate that if banks offer BOP Real to foreign shareholders, their ability to continue rebuilding capital will be affected. But despite this, we expect the capital buffers to remain at historically high levels.
All right. And for our last stop on our global world tour, we're going to go to the UAE, which had extreme flooding in mid April. Is the aftermath of that flooding going to materially impact the outlook for bank profits, Natasha?
The impact on core bank profits from the payment referees is expected to be limited, but losses to real estate management subsidiaries could be substantial if they shoulder much of the repair burden. What would negatively affect our outlook is if recovery costs significantly exceed expectations, to the point that they result in failure of large insurance or real estate development companies.
And what about the potential impact on non-performing loans?
Generally, consumers are likely to be shielded from most damages associated with the extreme rainfall and flooding that was experienced in the UAE during mid-April. Given the property developers' support for repairs and the central bank's directive providing loan payment reprieves and requiring insurance companies to indemnify consumers against losses. This combined with the quick reopening of business activity will support continued decline in loans.
Mm. And any final thoughts for our listeners, Natasha?
Well, just generally to recap, Um, the items that we are watching for in May are the increased acquisition of weaker banks by larger banks in China and the first quarter data releases in 2024, which are likely to reaffirm the limited credit expansion and ongoing asset quality pressures in Central Europe and Balkans, the Ukrainian privatization of state-owned banks, and the likelihood of it being held back by ongoing asset quality and capital concerns, and also in Argentina, with Argentinian banks likely to be allowed to use the BOP Real bonds to pay dividends overseas, which may moderately reduce capital buffers. And lastly, the cost to insurers and banks in the UAE from the extreme flooding will become clearer in May, but the outlook for profits and non-performing loans is unlikely to be affected.
All right. Well, all that's left for me to do is to thank you, Natasha, for sharing your insights with us on these events shaping the banking risk landscape in emerging markets. And thanks to you, our listeners, for tuning in. Please join us next week when we'll hear from our Purchasing Managers Index team of economists. Until then.
Thank you for listening to the Economics and Country Risk podcast. Connect with us on LinkedIn and Twitter, and don't forget to subscribe to the podcast so you never miss an episode.